One of our mottos at Assad Wealth Management is we want to bridge the gap between Deen plus Dunya. That is our slogan. We want to make sure that you're successful in this world and hereafter. It is very, very important that you grow wealth, you be wealthy, your family's taken care of. There's a comprehensive financial plan in place, but we do not want you to compromise your principles. That is the motivation for what we do every day.
Sharia-compliant investing is important for Muslim community because of the lack of options available on the market for Muslims to begin with. When they earn their money, there's inflation, times are changing. Your money, which is today, is not worth much after a couple of years, and so on and so forth. So there's a natural depreciation of your money.
I loved his process because he meets up with you, he understands your questions, he understands your financial position for your family, for your future financial goals, what you're trying to achieve. And then he comes up with a plan. And then we discussed those plans in a couple of meetings, and then we were able to set up and do the investments.
Whenever I have a need, I give him a call or send an email. There's a quick response back from him. He's always on top of my finances, and we go through our financial management plan twice in a year basis as well. And he gives me honest advice. Something is good and something which has risk, and it's not about just pushing or selling a product. It's all about what is comfortable for me.
His relationship with the scholars is continuous, and he continues to do the seminars and webinars to educate people around concepts like zakat, like how do they impact, how they can do the halal home financing and mortgages. So this is very important that he is himself invested in the learning, and he is distributing that learning, and it's built into his process.
My message to the community is that do not be scared of investing. Investing is actually quite simple. Educate yourself on the basics, inshallah ta'ala. Allow yourself to learn and allow yourself to have your money work for you. Once we have money, once we have wealth, it gives us the flexibility and freedom that we seek, and allows the capacity to give more, allows the capacity to take care of our families and, the cause that we believe in. Assalamu alaikum wa rahmatullahi wa barakatuhu, everyone. Jazakallahu khairan for joining us for another very exciting, very informative webinar. Are halal mortgages truly halal, and are they truly worth it or not? As always, our time is extremely limited, and we are under the gun to present to you as much information as possible so you can make an informed decision for you and your family, inshallah ta'ala. So let us begin, bismillah ta'ala. We're going to take just a few seconds to introduce you to who we are, what we do in the company I work for. We're going to have our Sheikh Navaid Aziz join us. He is live in a different presentation in Toronto, but he's going to join us right away to talk a little bit about the Canadian Islamic finance landscape. We're going to have Brother Farooq join us from Muslim Money, and he's going to talk about the Servus Halal Mortgage, what it is, how it works, how different is it actually really a good deal or not. I'm going to come back, talk about rent versus buy. Should you rent, should you buy? What's the right option for you? And then we're going to give you a framework that you can use to make an informed decision for you and your family, and we'll have some Q&A after that. If you're on the website, right below it, there's actually a chat that's going on. If you have any questions, any comments, please leave them in the chat, and we will grab those questions and answer as many as we can towards the end of the presentation. That's number one. Number two, if you have any problems, any issues with the feed not coming to you, because we're live on YouTube, just simply refresh, restart. That should solve your problems when it comes to the feed aspect of it. My name is Hash Assad. I'm an executive financial consultant as well as a division manager with IG Wealth Management. I've been in this role in this company for 20 years now, alhamdulillah. I have certain designations. One of them is a CFP, a Certified Financial Planner. That is the P of my industry for what I do. It's a worldwide recognized designation for providing comprehensive financial planning, from halal investments to making sure you have a will, a power attorney, personal directive, to a retirement plan, a proper tax plan, and making sure your wealth is passed down to the next generation, and then buying your home in a halal way possible. Alhamdulillah, we were able to win what I call from the Wealth Professional Awards, the Advisor of the Year for Responsible Investments, in our hand in launching one of the only, and I would say publicly available halal mutual funds in Canada. So that's very, very good. I don't do this on my own. I have a very strategic, very client-centric team of individuals behind me with over 80 years of combined experience in my team, from individuals like Sultan Al-Kaki to Mustafa Asma to Rehana, who recently joined us, my right-hand man, AJ Saran, and our assistant and individual in charge of our financial plans, Sean Carafel. Okay, halal.asadwal.ca. You can always go there and check us out, who we are, what we do, and how we ensure your money is invested in a halal way. If you're somebody who's on LinkedIn, we're active on LinkedIn. Please join my network, connect with me. Love to have you part of my network, and we can have the conversations. We're active on Instagram, Facebook, and a simple Google search for Asad Wealth Management should land you, tell you more about who we are. You are actually on YouTube. If you are new here, please subscribe. We're trying to get to 1,000 subscribers, inshallah ta'ala. So do it. Just subscribe right there, and love to have you. And then we publish videos, shorts, almost every week. And we try to provide as much value as we can to you and your family. Okay, with all that being said, I'm going to dig into Islamic finance and the current landscape when it comes to the lending aspect of it. We're talking about the, not necessarily the investment aspect, but the lending aspect of it. For that section, I'm going to invite my dear friend, mentor, a client, and our Sharia advisor, Sheikh Navaid Aziz. He is a Canadian Muslim public figure. He is worldwide a recognized individual. A simple Google search for Sheikh Navaid will land you in the right places. He's a teacher at Al-Maghrib Institute. He is a director of community development with Yaqeen Institute. Numerous appearances, in print and media, online, and somebody who's extremely active on the social as well, if you want to join his network. And with that all being said, we're going to get Sheikh Navaid Aziz to come in here because he has another presentation to do at the same time he's doing this presentation.
Jazakallah khair, Hash. Thank you so much. I really appreciate you making it short and concise. Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. Wa sallallahu wa sallam wa baraka ala nabiyyina Muhammad wa ala alihi wa sahbihi ajma'een. My dear brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh. I want to start us all off by a beautiful dua that Asiya made, that Allah subhanahu wa ta'ala preserved for us in the Quran, when she said, Rabbi ibni li baytan indaka fil Jannah, that, oh Allah, make for me a house near you in Jannah. And I want us to remember that that is the ultimate goal and the ultimate prize. No matter how many houses you have in this dunya, they will be worth nothing if you don't get to Jannah. And what could be more prime real estate than having a house close to Allah subhanahu wa ta'ala in Jannah? May Allah subhanahu wa ta'ala bless us with those. Allahumma ameen. So what I want to begin with is by understanding the main difference between a conventional mortgage and a Sharia-compliant mortgage. A conventional mortgage will usually have three parties involved. You'll have the buyer, the seller, and the creditor or the financier, the one that is loaning you the money. And you'll have two contracts, one of the buying and selling of the house, and the second of the loan. The loan has profit being made on it. And that is the key distinction, that in a Sharia-compliant mortgage, you will not make money off of money. You will make money off of a product or a service. And that will always be the main distinction that will take place. Which leads me to point number 2. What are 3 popular terms for contracts in Islamic finance that you should be familiar with? Number 1 is Murabaha, number 2 is Musharaka, and number 3 is Ijara. I'm going to start off with the easiest one first, which is Ijara. Ijara is basically just leasing and renting. So you can imagine a bank purchases a product, or an individual purchases a car or a house, and they just lease it out and they rent it out. They will always have ownership of this product and commodity, and they're renting out its utility. They're renting out its utility, and that is generating income for them. That is what Ijara is. That is the simplest term. Think of it as leasing or renting, which now brings us to Murabaha and Musharaka. Let us begin with Murabaha. Murabaha basically is a direct contract that you have with a seller. So for the sake of a house, what's going to end up happening? You will go to a person that has money, and you will identify a house to them and basically commit a promissory note that if you buy this house for me, I agree to buy this house from you, and we will agree upon a price after you have ownership of the house. So now this individual or this institution buys the house and sells it to you for a markup. So for example, there's a house on the market for $400,000, but you don't have $400,000. Perhaps you may only have $100,000. So you find this individual or this institution that does have money, and you tell them, this is the house that I would like to buy. They purchase the house for $400,000. They now have ownership of this house. They now come to you with an agreement and say that over a period of 20 years, I will sell you this house for $500,000. So you will notice that this is only a two-party contract between a buyer and a seller. There is no creditor, there is no financier involved, and that is what Murabaha is. That is what Murabaha is. Then you have Musharaka, which basically means to have a partnership where two parties will go into a venture together, both having interest in the commodity or in the product, and you will have a majority shareholder and you will have a minority shareholder. And based upon their percentage of ownership, the minority shareholder over a period of time will not only be paying rent for the utility of the facility that they are using or the product that they are using, but also they will be purchasing back shares from the majority holder. They will be purchasing back shares from the majority holder. And eventually, over a period of time, the assumption is that they will take over complete ownership from this majority holder, and they themselves become the sole shareholder and title owner of the property. So this is a key distinction over here. In the case of a Murabaha contract, the title transfers immediately to the buyer, whereas in a Musharaka contract, it is a joint title that will eventually transfer from the majority shareholder to the minority shareholder based upon the percentages of ownership. So these are the different types of contracts that you should be familiar with as you get exposed to Islamic finance. So you'll notice that we will be discussing quite a few of the financial institutions that are out there. These are the contracts that they offer, basically Murabaha and Musharaka. Now you have a brief understanding of what they are. Which brings us to the Servus Halal Mortgage. This was something that was certified by the Canadian Islamic Finance Board here in Alberta. And we have, mashallah, a person that has done a deep dive into this. Is it actually halal or not? We'll be hearing from Farooq Maseehuddin telling us about the ins and outs. But just to give people peace of mind, there is a Sharia compliance board that is involved, that has some very trustworthy and knowledgeable scholars involved that have said it is Sharia compliant. And likewise, you can get more details where we spoke to the head of the Sharia committee, Sheikh Hassan Shaybani, where Hash and I did a podcast with him. You can scan the QR code, or you can go to asadwealth.ca/media and see our podcast with Sheikh Hassan Shaybani over there. Now, understanding the halal lenders frameworks. Just because someone calls themselves Sharia compliant, it doesn't mean it actually is Sharia compliant. You want to make sure that you are doing your due diligence and making sure that it actually is. So what are the things that you should be looking out for? The things that you should be looking out for are the following. The people behind the institution, are they known and trustworthy? Do they have a history in the community? Meaning, have they just recently shown up on the scene, or have they been there for a while, right? You want to make sure that you get involved with someone that is known and has a track record in their community. Number two, has their Sharia compliance been verified with the scholars that are listed? So you'll notice that a lot of people love to drop the name of Mufti Taqi Usmani. Mufti Taqi Usmani verified our contract. He may have done that 20 years ago, but since then your product may have changed and changes may have been made, but you're still using his name. So make sure that the Sharia compliance is up to date. Now, number three, are they taking a conventional mortgage from the bank and repackaging it? And this is where, it's the unfortunate reality that we see some of these corporations that are out there doing that. They will build a trust in your name, borrow money from a conventional financial institution, and then mark it up and then repackage and sell it to you and call it Sharia compliant. Basically, they're taking a mortgage and charging you for it. If you were going to take a mortgage at some point, you might as well just have done it yourself. May Allah subhanahu wa ta'ala protect us. Number four, if it is in the Musharaka model, do they share in the liability, taxes, and maintenance? So in the Musharaka model, where you have a joint partnership, ideally speaking, there should be a shared ownership on the maintenance of the house, on the taxes that are paid, on the insurance that is being paid. All of that should be shared. Oftentimes, that is foregone, and it is assumed that the purchaser will take all of that liability on their own. Always read through their terms and conditions thoroughly. Always get legal advice before you do that. check for reviews of clients and customers, and make sure that there aren't, a lot of bad reviews with regards to customer service. So oftentimes when they want money from you, they'll chase you up and they'll be in touch with you. But as soon as you need something from them, oftentimes they'll disappear. So make sure people haven't had similar experiences, and this isn't the case. And then last but not least, always do your own due diligence and contact your local imam or sheikh for further advice to make sure if it is Sharia compliant or not. Now, here's a list of Islamic or those that attribute themselves to Islamic finance and Sharia compliance that you can find on Wikipedia, bi'idhnillahi ta'ala. And let's see if I can get the slide to change. For some reason, the slide is not changing. Oops. Okay. Can we go back one more slide? Hash, I need your help, man.
So just move your mouse over, and there should be a little thing that pops up with.
Yeah, but it's not working. I'm trying.
I'll help you. I'll help you, Shota. There we go.
Yeah,
there you go. We'll just go there.
So for some reason, it's showing me the Halal Lenders Framework still.
Oh, I see. Okay, I see. You're seeing it's not refreshing for you for some reason. Okay.
Yeah.
So we're looking at the.
Yeah, now I'm seeing it.
Okay.
Yeah,
perfect.
now I'm seeing it. Here we go. So these are a list of all of the Islamic finance corporations that you can find in Canada. And just for your own knowledge, we are not endorsing any of them. This is just for the sake of your own knowledge. Please always do your own due diligence. So you have Aya Financial, Zero Mortgage, Manzil, Iqrad, Canadian Islamic Finance Corporation, Halal Homes, Murabaha Homes, Noor Cooperative. You'll find a lot of these. So this is just for your own knowledge that you can start your journey, but always do your own due diligence, bi'idhnillahi ta'ala. Which now brings us to basically buying foreclosed homes. Foreclosed homes was a big thing when people were defaulting on their mortgages. And I have an instinct that there is a chance that that may be coming back. So if that does come back, buying a foreclosed home can become Sharia compliant if the bank takes ownership of the house and you purchase it directly from the bank, and you come to an agreement with the bank that whatever interest they were going to charge in the loan, they build it into the price of the house and you have it in one contract. Or if they have two contracts, then the loan contract is at 0%, and then the interest that they were going to charge is built into the price of the house. So ideally, if you have one contract, that is better. But if they insist on having two contracts, have the second contract at 0%, and the price of the home will increase thereafter. And inshallah, you can do more reading at investopedia.com, investing, buying foreclosed homes. You can get a lot of good information there, bi'idhnillahi ta'ala. Now, you can also lend yourself money in Canada, and this can be through your business corporation if you have a corporation, and it can also be through your RRSP. And again, with the business corporation, I think it's pretty straightforward. You lend yourself money, and the expectation is that the CRA expects you to charge yourself interest. But as long as you are sole owner of the business, then when you charge yourself interest according to the CRA, it's not actually interest in Islam. And then with regards to the RRSP, there are ways that you can lend yourself money from the RRSP. This is not the first home buyers plan that we're referring to, which caps out at $35,000. This is an actual loan that you give yourself. But I'm finding more and more financial institutions don't know about this, nor are they willing to help facilitate this. So this is something that you can look into as well. From what I remember, you do need to have at least $100,000 in your RRSP before you can give this loan to yourself. Which brings us to the last component I will be speaking about, bi'idhnillahi ta'ala, that while we seek all of the physical means that are out there, let us not forget the spiritual means. The spiritual means, Allah's Messenger sallallahu alaihi wasallam, he tells us that whoever gives up lying while joking will have a house in the middle of paradise. Whoever gives up arguing even when they are right will have a house in the lowest of paradise. And whoever strives to perfect their character will have a house in the highest of paradise. So before you build your houses in this world, focus on building your houses in Jannah. Now, with regards to increasing your rizq, increase in your istighfar, right? The more istighfar you make, the more the impediments are removed between you and your risk. Number two, the Prophet ﷺ taught us to make specific dua for our risk. Allahumma inni as'aluka min fadlik. Allahumma inni as'aluka ilman nafi'a wa rizqan tayyiba wa amalan mutaqabbala. Increase in the du'as for your risk. And last but not least, increase in your sadaqah. And the angels will even make dua for you. Allahumma a'ti kulla munfiqin khalafa. Oh Allah, those that gave for your sake, give them back that which they gave and much, much more. So these are ways to increase your risk and inshallah build your homes in Jannah. May Allah subhanahu wa ta'ala increase our risk and bless our risk and make our wealth a proof for us and not a proof against us, and grant us homes in Jannah. Allahumma ameen. Jazakumullah khairan. Inshallah, I'm going to hand it over to Hash, and I'll see you guys back for the Q&A. Take care. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh. Sheikh, Jazakallah khairan for that. We appreciate you. I know you have to go, but we'll see you back here for the Q&A. All right, folks, let's get into some what I call the meat and the potatoes. We have today with us Brother Farooq. He is the founder of Muslim Money Guy. MuslimMoney.co is the website. He's a financial educator and a writer, mashallah, tabarakallah. He has many designations, of course, but one of them is he is a Bachelor of Education and he has a Master's in Education as well. So he can teach properly more than I can. He is actually active high school teacher. I think that's correct. And he is very well involved in a lot of different Muslim community organizations, especially in Edmonton, over 2 decades of experience. We are very blessed to have him and very happy to have him. And inshallah, what he's going to do is take us through specifically the Servus Halal Mortgage, what it is, how it works, is it really a good deal or not, what the interest rates are, right? And then he's going to dissect that for us, inshallah ta'ala. Assalamu alaikum wa rahmatullahi wa barakatuh, Farooq.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Can you hear me?
I can hear you. You're coming nice and clear and loud. I love your mic. You're ready for action. So I'm going to leave it with you. You know how to control the slides. Let us go through the next few slides, inshallah ta'ala.
Bismillah. Bismillah walhamdulillah wa salatu wa salamu ala rasulillah wa ala alihi wa sahbihi wa man wala. Assalamu alaikum to everyone who's joining us from far and wide. My name, as Hash mentioned, is Farooq Maseehuddin. I'm the founder of MuslimMoney.co. It's an educational platform designed to help Muslims make solid, grounded, spiritually sound financial decisions. And today we are going to be going through this new product that emerged sort of on the scene several months ago. There were murmurs of it. And then, alhamdulillah, a few months ago, we were informed that this summer we would have a few folks who'd have the opportunity to get pre-approval for this Servus Halal Mortgage. And after a test period by the fall of 2025, so we're right there, this product would be available to Albertans across the province. And I was able to work with and get my hands on some pre-approval documents from one of the brothers who went through the entire process. And that allowed me to sort of unpack the product so that we could get to the bottom of whether or not this is a good financial decision for everyone, or perhaps there's a subset of people for whom this isn't a great financial decision, and then there's another group of people for whom this is just what they need. So I'm a teacher, as Hash mentioned, by occupation. I also am a teacher by vocation. I say it's sort of my passion, and my drive is to try to find ways to take complex ideas and make them a little bit more simple, because I find that when I'm motivated to do that, I end up understanding the material a lot better. So my goal here is to try to take some pretty complex ideas and to try to boil them down to the bottom line, and to help us eventually come to a place where we have a decision-making framework for whether or not this is the right product for you. So this is going to take some time. And again, this might feel like you're back in high school, because that's where I just was just a few hours ago. I was in my high school classroom. So that's kind of like the vibe I'm on right now. This is a long article that I published earlier this month at MuslimMoney.co. You can find it live on the website. It's a lengthy article, and what we're going to be doing over the next few minutes is we're going to go over some of the key highlights from this article and reveal some key insights that you can take home and use as eventually a decision making framework for yourself. So I would encourage you to read the article. It's long, but it's worthwhile, I think, if you are planning to seriously consider the Servus Halal Mortgage, and also if you're planning to pursue any sort of halal mortgage out there. The article will perhaps reveal some of the insider baseball that is going on, and hopefully help you with not just whether or not you should go with Servus, but also any other financing institution out there. So I'm going to just do a quick glance at Servus, this new Servus Halal product. This is publicly available material. Whoops, let me go back here. So I'm going to have to just minimize this because there we go. Now I can see it a little bit better. So Servus Halal is, they mentioned that the property has to be in Alberta. Of course, Servus is a credit union, and so it's regulated within the province. The down payment right now has to be 20%. You need to have that money in a Canadian institution for 90 days or more. You got to have a credit score of 650, and they are financing existing homes or newly constructed homes that are near completion. So those are the basics. You can find that on the Servus Halal website. But before we break down what that actually means and we get into the real numbers from somebody who went through the pre-approval process, I think it's important to just step back and just understand how mortgages work in general. And this is we're going to be here just for a brief moment, because for me as a Muslim who never thought that I would ever entertain a conventional mortgage, the way that this stuff worked was not of my interest. I knew that no pun intended, I wasn't interested in learning about mortgages, frankly, because I was never going to get one. I knew how they worked in general, but there were some specifics that perhaps are common knowledge for people who have mortgages, but for somebody who doesn't, it might not be. And so this is important because it sets the stage for what we're going to be talking about in just a second. So this new Servus Halal product is a 25-year fixed mortgage, and 25-year fixed mortgages are extremely rare in Canada. In fact, I would go as far as to say they're virtually unheard of. And there is one 25-year fixed posted rate out there, and we'll talk about that a little bit later. The way that most Canadians buy their homes is through either a 5-year fixed or 5-year variable mortgage. And you might hear about interest rates on the news, as we all do. The way that mortgages are priced depends on whether it's variable or fixed. So a variable mortgage is it's priced according to that overnight rate that you hear about on the news, and you'll hear about updates like about 8 times a year when mortgage rates are updated. A fixed rate mortgage is not priced according to that. A fixed rate mortgage is priced according to the Canadian bond market, and there are various bond yields that are used to determine what the interest rate is for a mortgage. So if it's a 5-year mortgage, they're looking at a particular bond yield. If it's a 10-year mortgage, then they're looking at a different bond yield. And then the bank will take that yield, that percentage, and then they'll add their markup, and then that will be the mortgage rate that the person will pay if they're on that fixed rate. So that's important to just note, because that is essentially what's happening behind the scenes, right? That doesn't impact the Sharia compliance. It's just an important thing to note, because that is how these financial institutions price these products, right? Sharia compliant or not. So again, we have a 25-year fixed mortgage, and so this Servus Halal Mortgage is priced to a very long-term bond yield, and the rate that the brother got is probably pretty close to what you would get if you were to go through the same pre-approval process. There might be some variance, but because bond yields don't shift dramatically overnight, they do shift though, right? Because it's a market-driven price or market-driven number, and so it could go up or down. But we have because of the way the market works, we have enough information to be able to come to some conclusions. Okay. All right, now let's get to the actual product itself, to Servus Halal itself. So as Sheikh Navaid said, this is a Murabaha mortgage, and the specific type of Murabaha that this is called al-Murabaha lil-Amri bil-Shira, which is a particular financial product that was engineered in the 1970s. And the important thing to note is that it went through a long a long debate among scholars. It was debated for years and years, and eventually there was sort of like a sort of nascent consensus that emerged in the 1980s that this was going to be a model that folks used to build the foundations of the Islamic finance world. And so with this particular product, we have a series of sales instead of a loan and a sale. So in general, you would have, when you have a conventional mortgage, you have a loan between you, the buyer, and the financial institution, and then you take that money and you purchase the home from the seller, and you will pay interest on that loan back to the financial institution. With a Murabaha mortgage, it's a little bit different. The financial institution will buy the product, buy the house rather, from the seller, and then sell that house back to you at a marked up price. This is just the image zoomed in. Okay, so how is that different? Al-Murabaha lil-Amri bi-Shira in general is a 4-stage process. And I think it's instructive here to just look at what those 4 stages are. The first thing that happens in general, so this is not just for service, but for how this product or this model is applied to any product out there that follows the model, is first is a promise that you make. So if you're the customer, you make a promise, what's known as al-Wa'd al-Mulzim lil-Shira. A promise to purchase a property. It's a one-way promise, and that is important. There's some things that are kind of subtle there that need to be discussed, but we'll skip over that. But the point is that you make a promise to buy a particular property. The bank purchases it. They mark it up. They sell it back to you at a marked up price. And then that marked up price, whatever that marked up price is, becomes a fixed debt. And because it's a debt, that debt can never increase. It must stay the same for the entire payment period. This is further detailed in an earlier article on muslimmoney.co called the title of the article was "The PhD That Birthed a $2 trillion Islamic Finance Industry." It goes through the details of this particular model and how it was contested first, who the founder of this model was in the 1970s, who kind of like pieced it together, engineered it. It was by Dr. Sami Hamoud, who was a Jordanian economist, Allah yarhamu, who passed away several years ago. And the scholarly debates that went on before this model was eventually approved. So functionally, what's the difference for you? When you go into a product like this for 25 years, which is, again, a very unique product in the Canadian landscape, you're going to get 3 benefits as a consumer. The first is that you get 25 years of certainty. Your payment is fixed for all 25 years. And that's a really important point, which is that doesn't happen in Canada. In general, people will have fixed payments for 5-year terms, and then they'll have to face renewal risk, and they'll have to take on whatever the interest rate is when they are up for renewal. The cost is transparent because of the way the Murabaha is structured. It's easy to see how much you're going to be paying after 25 years. Whereas with a conventional mortgage, the total that you're going to pay is a little bit more obscured. And of course, your debt never increases. So in the case of the real case study that we were able to get our hands on, here are some of the details. The first is that the home price that the brother was looking to purchase was about $577,000. His down payment, 20% of that, was $115,000, and so the amount financed would have been $461,000. And so his total sale price, right, the debt that he would have to pay back over 25 years was about $1 million. So $998,817. And the implied profit rate, the rate that they used to get that amount, was 7.2%. And so there you have it. A lot of people were wondering, what's the rate? What's the rate? That was the rate from an official pre-approval document, 7.2%. Will that be the rate that you get? I can't say, but there's a very good chance it'll be probably somewhere around there. So I'm going to just speak a little bit about the total Murabaha sale. This is, again, a screenshot from the article. The total Murabaha sale was about $1 million, and people are really surprised at that price. But I think it's important to note that that's just the way home ownership goes in Canada. This here is another screenshot from the article where we can see how 1% difference in the interest rate changes the total that you pay on a home. So this is after 25 years. If you had a 2% rate on a home, then you'd be looking at about $702,000, but which is is not very bad. It's not bad at all, especially given the value of the home after 25 years. So after 25 years, if you assume a 3.29% annual appreciation of the home, which is sort of like the Canadian average, that home, that $577,000 home, will be worth about $1.3 million. So the amount that you pay and how much you save based off of that is more advantageous to you. So you can see that 7% is quite high. It doesn't meet though the total value of the home after 25 years. All right, this was the other big question. So you are being sold the home back for about $1 million. Are you on hook for the entire $1 million if that's what you're being sold back? The answer is technically yes, but practically no. So it's not permissible for the financial institution to contractually be contractually obligated to give you a rebate, but they happen to do so out of their own decisions, right? Out of their own decision-making framework. And also because I think there's some regulatory restrictions around what they can take if somebody leaves a mortgage early. So the way that this is framed in Islamic finance circles is a term that's called ibra, which is a rebate. And so the question that we were able to kind of ascertain using the documents that we got was what the effective APR is depending on when somebody leaves the mortgage. So that's really important. So we got two documents. We got the break fee schedule. Actually, I should mention this. There's an amortization schedule. So that shows exactly how much would be owed at every single month, all 300 months of the term. And then we also got the break fee schedule, how much would be owed or how much extra would need to be paid in order to get out of the mortgage. And so if you combine those two, right, the remaining balance plus the break fee, that's the amount that you would have to pay at the end to get out of the mortgage. And so this is the chart. If you were to leave after a year, you can see that the APR, the effective APR after 1 year is quite high. And then by about year 10, things begin to level off. So a decade in is when things begin to approach the posted rate of 7.2%. So now that we have these numbers, the question is this a good deal? And I think in order to answer that question, we have to think about how a broader framework to work through financial decisions. The first thing to note is that money decisions aren't silos, right? They're duals. Any decision can look good by itself, but it's important to put it up against something. And this was actually very hard. How do you decide what to compare this Servus Halal Mortgage to, especially given how rare 25-year mortgages are in Canada? And then what is a scoreboard? So the two most common opponents that people would bring up are one, the 5-year fixed mortgage rates. And then there's another one, which is the 25-year fixed mortgage rates. And we'll talk about each one independently here. The 5-year fixed mortgage rate is just an unfair opponent here because it is only guaranteeing 5 years of rate certainty, whereas with the 25-year fixed mortgage, you're getting 25 years of rate certainty. So it's unfair to use this as the comparison. And there's a number of other mathematical reasons why it would be unfair to use it. And then there's the second is this 25-year fixed mortgage. And you'll hear people talking about this RBC 12% mortgage that is 25 years. The hard part about using that as the comparison is that it seems to be a posted rate that no one that I know of, I've looked earnestly for people who've used this, ever gets a 25-year fixed mortgage at 12%. That rate also has not moved. It hasn't budged for a very, very, very long time, which suggests that this is just a posted rate, almost a punitive rate that people don't use. And if you happen to know someone who has taken a 25-year fixed mortgage with someone with the RBC, please send me an email, Farooq@muslimmoney.co, because I'm curious to know why that would have been the case. So it seems to be the case that the 25-year fixed mortgage rate is an unfair comparison as well, because it's not a product that Canadians actually use. And so what is the fairest opponent? This is where we landed in the article. the 10-year fixed rate. So the 10-year fixed rate is one that is used less commonly than the 5-year fixed, but it's still one that is used. And that's one. And secondly, the data supports that people in Canada will usually stay in their home for about 10 years. So even if you take this 25-year fixed mortgage from Servus, there's a very good chance statistically that you'll be in that home for about 10 to 12 years if you match up with the average Canadian. And so here's the last slide, and I'll hand it back off to Hash here after this. The Servus Halal premium, right, after all the calculations are done, is about 1%. Right, so 1% is significant. I'll just remind you about that chart where I showed 1% differences in percentage in APRs and how that impacted the total cost of the home and the total spent on the home. 1% is significant, but it is at least quantifiable, something that you can think about. And there are benefits that you get with that additional 1%. You can see here that when we compare the Servus Halal to a median conventional 10-year fixed mortgage, Servus Halal comes in at about $40,000 extra over 10 years. So you think about $4,000 annually, approximately, extra to go with Servus Halal compared to the median 10-year fixed mortgage rate. And what do you get for that extra $40,000 over 10 years? So an additional $4,000 over 10 years is one, Sharia compliance. And number two, you get rate certainty, that your rate will never change, that the amount that you pay per month will never change. And you get that for the premium that you pay with Servus Halal. Okay, I think I made it within my time limit, and I'll hand it back to Hash.
Jazakallah khairan, man. You have all the time in the world. Folks, Farooq, I'm going to hide you for a few minutes. I know you're coming back afterwards. Questions, please leave your questions in the chat here. We'll come to them. I think we'll have some time for Q&A. There's some great questions already, inshallah, so we'll dig into a little bit more deeper. But my specific section that I want to talk to you today is about, rent versus homeownership and some of the myths that we want to break down, and we want to get into it. So welcome to my section. There are some, deeply held beliefs when it comes to homeownership that me as a financial advisor, financial planner of 20 years, the most frequently asked question of me is not, Hash, how do I invest my money, but how do I buy my home the halal way? I have seen a lot of clients, prospects, and generally speaking, Muslim families make very emotional decisions about housing. That doesn't quite align when it comes to their long-term financial goals. So today what I want to do is I want to talk a little bit about the psychology. I want to talk a little bit about the cultural pressures when it comes to buying a home. And most importantly, I want to talk about the mathematics behind the rent versus the buy decision, inshallah ta'ala. So with that being said, let's get into some of the next few slides. All right, culturally, let's dive into it a little bit more if we can. This is probably the most common thing, in our communities, especially, if you are from an immigrant background, we have come from places where investments are not a big thing, stock market is not a big thing, and everything is land-based, and, the pressure to own a home, either from your parents, either from your relatives, from your friends, your uncles, your aunts, and stuff like that. And this idea is reinforced time and time again. Renting is viewed as, you're financially failing, if that's the way to put it, right? And terminology such as real estate always goes up, and the American dream or the Canadian dream. So this cultural narrative is so strong that it actually sometimes overrides rational financial planning, rational financial analysis, which we'll talk about. But if I were to tell you, that some of my personal successful, mashallah tabarakallah, extremely high net worth individuals are actually renters. They're actually renters with substantial amount of wealth. I want to share the story with you that has actually really, it caught me off guard, I guess, in a sense. One of the ways that we've been able to help people buy their home in the halal way without having some of these halal financing options available previously is that, you can go to the bank and buy a home the traditional way with a mortgage, no problem. But if you want to avoid the interest aspect of it, so we have actually put together plans for individuals 5 years ago, 7 years ago, some 10 years ago, where we said the following: listen, you have some money saved for a down payment. You could go the traditional mortgage route, or alternatively, let's just save. Let's just save aggressively. Let's invest your down payment in a more halal way. Allow that money to grow over time and be in a position, say 5-10 years out, where you can buy your home with cash, Now, after being in business for 20 years, you can imagine a lot of those people that started 10 years ago are now in a position to buy that home. But what I found, fascinating, absolutely fascinating, is that these individuals are actually not buying the home. And mashallah tabarakallah, they're extremely smart, because they're looking at this going, listen, Hash, so I have just made, a 10% return, $800,000, $80,000 profit, and then I'm renting for $30,000, and I still get to keep $50,000 in my pocket. Why would I take the $800,000 and buy this home, right, if I don't have a specific need for it? So that really baffled me, because we have worked towards a goal for 5 to 10 years, and we got to the gates of heaven, and they're making decisions saying, I don't know if it makes sense for me to buy that home when my investments are doing really, really well. A real life example of this, actually. I want to talk a little bit about the psychology of it, right? So home ownership is deeply, deeply, deeply psychological, right? We believe that it provides a security, right? But sometimes, sometimes it's an illusion. The research actually is very, very clear. When you control, for example, for income, if you can control for health, some other factors, homeowners actually are really not more happier than renters. Like, at the end of the day, if you own a home or rent, it doesn't make you more happier or not. In fact, I would argue the fact that many homeowners actually report and have reported more stress. The stress from maintenance, right? If you worked all day, I tell you right now, if you work all day, you go home and you got to fix that faucet, you don't want to do it. Trust me. You got to mow the grass, and it's just, you got to fix that roof. It's a lot of work. I think a lot of stress comes from the mortgage as well, the debt, having to maintain that, having always been stressed out and not making that mortgage payment, and having your house foreclosed on you. That's very, very stressful. And being tied onto one location, for example, if you want to move to a different part of the country and move, well, you can't. You got to sell the place, you got to find buyers, you got to rent it out, and it's a lot of work. So there's a security aspect of it that we think we're buying, but we also have to be mindful of the fact that we're giving up significant trade-offs when it comes to buying the home itself. So psychology plays a huge, huge role in all of this. One thing that I want to talk about is the true cost of ownership. When we look at this, sometimes people say, and sometimes they get it wrong, right? So they look and say, what, if I have a $2,500 a month payment for rent, could I take the same $2,500 and apply it to a mortgage? At least I get to own the place, and maybe I'm paying down a little bit of more of the principal, and I get to keep this place after 25 years. But research has shown when you properly account for all the cost, we're talking about the opportunity cost. Let's just say you have $300,000 ready to go. It's invested in the market, is growing at 5 or 10%. Well, if you take that money, put it into the house, there's an opportunity cost for that money no longer being invested, right? There's property tax. If you are somebody who lives in Calgary, you've realized that the property values has gone up for absolutely no reason. We're not sure what our property value went up, just because they can collect more taxes. I remember property taxes being around $2,000. Now they're touching $5,000, and I don't know what they're going to be in the future. Maintenance costs you got to be mindful of, and of course, insurance is a big part of it. If you are somebody who lives in Calgary, and we have had these absolutely tremendous, what's I'm looking for? Hailstorms. We have hailstorms, and they have hit the city very, very, very roughly. And I know, our insurance costs have tripled for absolute, again, no claims, no nothing. We're all paying more for insurance. And insurance and homes in Calgary are now touching $3,000 to $5,000 a year. That is $500 a month. That's $400 to $500 a month. Actually, you have to pay just to insure the place. So the total cost of ownership typically matches, if not sometimes it exceeds rental costs. You have to also remember the fact that the markets tends to be more balanced. There is a mechanism in place that tries to balance the rent versus the ownership aspect of it, that we should be aware of it. So when you look at buying the home, just keep in mind, it's just not the payment that you have to be mindful of. It's all these extra costs that goes well above it, well above the rent payment itself. I want to talk a little bit about some statistics when it comes to some work that was done. There's an individual by the name of Ben Felix, and he has done an absolutely amazing job in many different videos where he compares the rent versus buy argument. He does a much more deep dive than I'm going to do today, as he spends more time on that. He has some statistics, some research reports. But this data may shock a lot of people, actually. So despite the narrative that we know that the Canadian real estate has gone up significantly and has been unstoppable over the last many years, disciplined renters, so we're talking about disciplined renters, and I'll define what disciplined renter is, have actually outperformed homeowners in 7 of the 12 major cities over the last 20 years. So a disciplined renter has actually outperformed a homeowner in 7 out of the 12 cities over the last 20 years. Even more striking is the fact that across shorter time periods, like if you look at the 5-year period, which is again probably better reflective of how people live and move around and stuff like that, renting came out ahead 71% of the time. Even in cities like Toronto, which has seen massive price increases, a disciplined renter has actually accumulated more wealth than the person that owned. And this is all based on science and math. And we'll actually have a link to this video where you can watch and verify some of this data. Let's talk about some more statistics if we can. And this is, the math aspect of it, which is, why the renter actually won and why did they win so often. And it's pretty straightforward. The answer is pretty straightforward. So if you look at, stocks which have significantly outperformed the real estate market in Canada. So while the Canadian real estate maybe is growing at about 6% annually, a diversified stock portfolio has a return, 9% or more. That difference between 6 to 9, that 3.5% difference compounded over 25 years has dramatically huge impact on how you as a renter end up versus a homeowner, right? Plus, the renter typically had lower monthly cost, allowing them to save a bit more of that. Now, there's an aspect of discipline, which I'll talk about this, so it doesn't work for everybody, just so you know, but something to keep in mind. So what exactly is a disciplined renter, and how does this all work? So even if you look at the data, which Ben Felix talks about a bit more, the compelling data that favors renting, discipline is probably the biggest thing. And this is where, either you can make it or fail, right? Is absolutely crucial to stay disciplined. So if renters don't invest their down payment and the monthly savings, if they don't use what I call high quality, excellent performing halal investments and portfolios, and even if they fail to save, say, 80% of what they were supposed to save versus 100%, ownership wins. Ownership wins and renting fails. Tight margins, very tight margins. So the mathematical advantage of renting must be earned through what I call consistent, disciplined behavior that most people, I would say, struggle with. So it's not for everybody. So mathematically, renting wins, but you have to be extremely disciplined for that to work. So that's important to know as well. Now, let's take a look at, when ownership makes sense. When does actually ownership make sense? So despite the data we just showed you, which favors renting in this case, ownership still makes sense for many different situations. So for example, if you need what I call a forced saving mechanism, if you are in a market that's high growth, for example, in Ontario, Toronto, and Vancouver, and part of Montreal, these markets are always going up, although they've come down a little bit in the last bit. If you can't find the rental that you want, for example, you need a basement, you need a certain number of rooms, and maybe people are not renting to you, buying is probably the right option, and you should consider that. Importantly, I would say, even when you look at the inferiority of mathematics when it comes to the ownership, it might be the right choice. It might be the right choice due to the behavioral aspect we just talked about. So most people, I would say, they're not going to skip their mortgage payment, but they probably may not invest that consistently and that strategically and put that money to work for them. Like, I mean, the amount of people I run into with hundreds of thousands of dollars just sitting in checking account doing absolutely nothing, it's just mind-boggling. So if you're not going to do that, if you're not going to actually invest the money, put that away, and just going to sit in checking account, even though you're renting, you're probably better off to just buy that home, and it's for savings and allows you to grow wealth over time. Now, when does renting kind of make sense? When does renting make sense? So as I mentioned, the data strongly supports renting for what I call disciplined renters and disciplined investors, with a 71% historical success rate across Canadian markets over many different time periods. Renting with disciplined investing has been mathematically superior choice most of the time. And this is particularly true if you got a good halal investment portfolio. A lot of the examples are being used in a lot of the videos, which we'll mention in a bit. They look at, a conservative 5 to 8, maybe 9% rate of return. Halal investments have done a lot better than that over the last decade. And if you need the flexibility and you don't want to, have all your life saving just dumped into a home, a lot of us just do that. Like, we have saved $300,000 just so hard for 10, 15 years of a life. We just take it and put it all into the house. But now, what are you going to do? You can't eat your house. You have to have money available to pay for some of these expenses and retire eventually, and some of the other things that come with it. So renting wins if you're disciplined. If you're not disciplined, then ownership wins, is sort of the message over here. So one of the things that I've personally experienced, which is this myth that homes are actually great investments, right? If you look at the overall Canadian real estate, it has returned about a 6% annually from 1974 to about 2024. But if you take into account maintenance, property tax, depreciation, the real return probably drops down to maybe 3 to 4%, right? While stocks in the same periods have done maybe say a 9% annually. If you look at the TSX, which is, I would say a good, well-performing markets in Canada, but it's not the S&P 500 in the US, which is, closing in at about 14 to 15% a year. So it's not the same thing. The other thing to keep in mind in Calgary, if you're able to buy a $700,000 home in 2008, you're technically able to buy that exact same $700,000 home in 2020. Like nothing, like the same house, 12 years later, same price. It's appreciated a little bit in the last bit because we had this influx of immigration and people coming in from different provinces. But, for 12 years, you did absolutely nothing while the stock market was rocketing and making a whole bunch of money. Something you have to keep in mind is the following. The homes themselves are a depreciating asset sitting on an appreciating land, right? We have to remember the fact that these homes are not necessarily appreciating because the wood is getting older, the roof is getting older, the dishwasher is getting older, your furnace is old. No, that doesn't appreciate, but it's sitting on land that does appreciate over time. So most of the wealth building comes from two aspects of it when you own a home. First is the leverage aspect of it. For example, if I have $300,000, if I take that money, put it into a home, and then I borrow that at $300,000, now I have a $600,000 home. And if that $600,000 home goes up in value 10%, well, I made $60,000 on my $300,000, even though I have money borrowed. So the leveraging aspect is why it kind of makes sense. It goes up. It's not because it's a superior investment. After maintenance costs, property taxes, and stuff like that, you're looking at 3 to 4% return. And while the stock market is doing 3 to 4x that number, the leveraging and the other aspect of it is extremely important, something to keep in mind. Okay, let's keep going through this. Something to keep in mind, alhamdulillah, we're all Muslims here, is the higher cost of halal financing worth it or not? That's what Farooq talked about in the last little bit. At 7.2%, it's up there. It's up there, right? So from the Islamic perspective, we must consider whether taking on significant debt for home aligns with our values. The avoidance of risk, the avoidance of interest, and being a good steward of your wealth is extremely important. The halal, financing, I call the halal tax products, make the rent versus buy decision even more important. If you're comparing a 4.5% average 5-year closed mortgage to a 7.2, that extra, 300 basis points, give or take, that adds up. You compound that over 25 years, you're paying significant amount of money for that home. And does it actually make sense or not? So sometimes I would say the most Islamic approach might be a disciplined renter paired with halal investments, especially if you're there for a short time horizon. Again, it doesn't work for everybody, but if you're disciplined enough to do this, I think it makes sense. So what are the next steps? Where do we go from here? So regardless of the path you choose, it doesn't really matter. Take action based on what I call analysis. Take action based on a comprehensive financial plan. Take action based on math and science and data. If you're buying, right? So that's what you should use to do it, not emotions. So if you're buying, ensure that you understand the true cost and that you have a long-term horizon when it comes to that. If you're renting, then set up systems for disciplined investing. Set up a system for saving. Don't let your money sitting in a checking account doing absolutely nothing. I have this motto which says, if the money lands in your bank account after you pay your expenses, that whatever actually you have should go out that next day and should be invested, should be growing, because you're responsible for zakat, you're responsible for inflation, and your money has to earn 4 to 5% just to say that you have the same amount of money next year, and the break-even aspect of it as well. So housing is just one component, should be one component of your overall wealth building strategy. I get that, I understand, the need to withdraw every single thing that you have and dump into a house, but you got to remember the fact that you have to live and you have to retire one day, and you have to have money to take care of those needs later down the road. You still have to take that vacation. It's great to have a home, but what else are you going to do to fund some of the other things? So what are the takeaways before we pass back to Farooq when it comes to the framework? If I were to summarize some of this and some of the stuff I've covered, the cultural pressures to own doesn't really align with financial reality. The mathematics often favor a disciplined renter, especially for shorter time periods. Ownership provides the behavioral advantage that often overcomes the mathematical disadvantage. So both paths can lead to building wealth when they're properly executed in both scenarios. Key is making decision based on careful analysis. Okay, I come back. So the key is making your decision based on careful analysis of your specific situation, rather than cultural assumption and pressures and things like that, and looking at the psychology aspect of it, inshallah. So with that being said, I'm going to bring Farooq back. He is going to show you a framework that you should use to follow to figure out what should you do and what decision should you take based on some guidelines for either should you own, should you buy, and what's the right path to do this. Assalamu alaikum, Farooq.
Wa alaikum salam wa rahmatullah. I'm going to try not to shake the camera this time.
Okay, man. Perfect. Jazakallah khairan.
Bismillah. Okay, so let's see here. I'm just got to find the right slide. Hash, I selected the correct slide. I'm just curious if you see it. Maybe you can help me out and put the right slide
it looks
up.
like we're having a bit of difficulty with that. So let me go back into here, and we'll reshare the slides. How's that? There you go. Perfect.
Okay, there we go. Yeah.
So now, what slide were we on? Let's
I think we're on 61. There we go.
Yeah, right here. I will stop right here. How's that?
Yeah. Do you see making your decision the framework?
Yep, I can see it. Yeah, perfect.
Okay. So I'm going to just walk through a decision framework that you can use to determine whether or not Servus Halal in particular is a product that you should consider. And it's a 3-step framework. And so we'll begin first with coming to a point where you actually find a home that you are interested in purchasing. So it's really important to work with real numbers, and to, even if you don't have a particular home that you are interested in, to find something that you'd be okay with. So to go onto a website, a real estate website, find a home that you would be happy with for your family, and then to ask yourself whether or not you would stay in a home like this for 10 or more years. Because that's really important. That 10-year mark, that decade mark, is what determines whether or not we should even go on and ask the next set of questions. If it's less than 10 years, then certainly you'd probably want to go the alternative route, which is to rent and invest. And just to reiterate what Hash mentioned, a renter here is a disciplined renter, so somebody who is renting and then also using the down payment and extra cash flow to invest regularly. One thing to note is that in the article, you'll see that the actual the threshold actually for the particular brother who shared his numbers with us was 13 years. But we said 10 to 15 because that seemed to be a reasonable ballpark kind of range, and also because to consider the added advantages of home ownership that Hash indicated. Okay, so let's say after looking at that home, you decide that 10 years is easy. You're going to be in that home for more than 10 years. Again, this is a general rule, right? The 10-year rule is often used for people regardless of what financing option they're going to be using, because there's a transaction cost and a carrying cost to being in a home. And so you want to make sure that you're in the home long enough to recoup those costs and to reap the financial benefits of that major financial decision. All right, after you have decided, okay, I want to stay in this home for more than 10 years, the next question is whether or not the amount that you'd be paying, the total cost of ownership per month, is less than or around 1/3 of your take-home pay, your net take-home pay. There's another article on muslimmoney.co. I know I keep on referring to articles there, but there is one that you can use to kind of help determine what your range would be, your net income, how your net income impacts how much house you can afford. And that's not just for home ownership, but it's also for renting as well. The question is, is that home, that particular home that you found on a real estate website that you're interested in maybe buying, that you'd be happy to stay in over 10 years, how much of your net pay does it cost to live there? That includes not just the Servus Halal amount, but also the home insurance. And there's a question I see about home insurance, but I think it's safe to assume that most financial institutions will require that you have home insurance, and that there is like a rukhsa that's offered to Muslims who have to take home insurance because of their particular scenario. But home insurance, property tax, maintenance, which ends up being about 1% of the cost of the home. Does that all equal? Is it more than or less than 1/3 of your pay? And that'll help you decide whether or not you should go on to the next question. But if not, if it's more than that and too high, then perhaps you should rent and invest. And then the question is whether or not that additional 1% is worth it, whether or not you'd be happy about that 1%. If you are paying a little bit extra for halal chicken, a little bit extra for halal chicken because the market is smaller, because they have to have a markup on it, because of whatever reasons it might be. I know many of us would be happy to pay that additional amount for that halal item. Is that extra 1% something that makes you happy? Are you okay with that? Because that seems to be the delta between this Sharia-compliant mortgage and one that is conventional. If you're not happy with it, then perhaps we're still at renting and investing. And then finally, if the answer is yes, then perhaps Servus Halal is the option to go with.
Perfect. Jazakallah khairan for that. Before we get to kind of Q&A part of it, I wanted to just let everybody know, if you don't know us, we've been in the business for 20 years now. We keep providing as much information as we can to make sure that we are able to align your deen and dunya. That's our motto. We want you to be successful. We want you to be successful in this world and hereafter without compromising your values with Assad Wealth Management. Just like bits of it, inshallah ta'ala, we are at the forefront of Islamic finance here in Canada, and we have done a lot of work when it comes to Sharia compliance. When we do look at investing versus buying versus renting, it's extremely important that your money is invested in a halal way. And that way we do is we look at, every single component of the portfolio is filtered through and vetted through level 1 and level 2 compliance. What does that mean? Basically, we want to make sure none of your money is invested in haram sectors, such as advertising, media, pornography, alcohol, gambling, weapons, and things like that. So we eliminate all those from your portfolios. Then whatever investments are left, we look at the guts of those companies. We look at the debt to equity ratio. We look at revenue from non-compliant activities. What does that look like? And then, if a company is a cash cow or an active business. So we do all the due diligence to make sure that your wealth grows in a halal way. And alhamdulillah, once you do that, not only does it grow in a very good rate, but it also aligns your deen and dunya, inshallah ta'ala. I have some resources for you. There are QR codes are here. You're welcome to take a screenshot of it, or you are welcome just to Google them. Rent versus buying a home, what people get wrong. That's Ben Felix's video. If you want to take a look at it. If you are renting is wasting money, a very interesting video I watched today about that. You can take a look at that. And then rent versus buying, there's a whole bunch of different rules, a 5% rule, an 8.71% rule that you can consider on YouTube, and watch our video with it as well, inshallah ta'ala. Okay, with all that being said, we're right on time. So what I want to do, if you don't mind, please, if you're on the website, and we're going to queue up some of the questions. Unfortunately, Sheikh Navaid is not going to be able to join us because he's still stuck in a different presentation. But me and Farooq are going to try our absolute best to answer as many questions as we can. The Islamic questions we might not be able to answer, but me and Farooq has a bit more in-depth knowledge than I do. But that being said, could you please, everybody, just take, not even like 30 seconds, if that's all it's going to take you. On the website that you're on, right below the Q&A or the chat, there is a link or an app that you can open up and give us a feedback. We're looking for feedback. We're looking for what do we do right? Did you love this webinar? Did you hated it? We don't know who you are, so just let it rip. Let us know how this was. If there's aspects that we should be changing or talking about. Did we miss anything? Your feedback is extremely important. So while we queue up the questions, please take about 30 seconds, give us your feedback. We'll pause here for a few seconds, and inshallah ta'ala, we'll try to answer as many questions as we can. And what I'll try to do is I'll try to post the link here in the chat as well, so you can easily click on it if that's possible. If not, it's s.assadwealth.ca/web feed. That's the website that you can go to, or scan the QR code, or if you're on the actual landing page where we are, right below the comments, there is a feedback window where you can let us know how we did. So we'll take a quick pause here, and then Farooq will get some questions. For all the questions, please leave them in the chat, and we'll try our absolute best to answer as many as we can to the best of our capacity and ability, inshallah ta'ala. Okay, I'll run a timer, and we will give you not very long.
Mm-hmm.
Or 30 seconds, inshallah. We'll Q&A. Farooq, you can see the questions, right?
I can, yes.
Perfect, okay. Perfect. 15 seconds, folks. Jazakallah khairan for giving us your feedback. We really appreciate it. And again, we don't know who you are, so it's all anonymous, and it helps us a lot. Okay, perfect. Jazakallah khairan. Let's get into some Q&A, Farooq. So we'll go like this. So we're going to put you on top like this, inshallah ta'ala. And then I'll get some easy ones here. Is the halal service mortgage restricted to Alberta? I guess that's the answer is yes.
Well, the property certainly needs to be in Alberta.
Yeah, so it's a credit union in Alberta, so unfortunately it is restricted to Alberta at this point. How is interest halal? Please expand on this. It's hard to understand. So do you want to take a crack at that?
Yeah, I'll just. Do you mind if I swing back to one of my slides here? Is that okay?
Yeah, sure.
If I,
Absolutely. Yeah. Go ahead. Yeah.
all right, Bismillah.
So
I'm just going to take
hide
you.
the slides. There we go. Yeah, you can go ahead.
There we go. I see it. There we go.
Yeah.
So I think the important thing to note about the interest rate is that it's a term that we use, but the reason why the Sharia scholars have deemed this particular model to be compliant is because what is happening is there are a series of sales happening, and at the end, when the final sale is made and you are deferring payments over the term, that is a fixed loan without an interest rate. And it sounds kind of complicated, but maybe if we work through it step by step, we'll see the difference. And for someone who's thinking in their mind, well, that sounds a lot like a regular conventional interest bearing loan. The key difference is the process. So the process is what the Canadian Islamic Finance Board has spent hours upon hours and days and months trying to work through, and they've ultimately landed on a model that is compliant. So in a conventional mortgage, you have a loan being made to you, the buyer, and then you're paying back the financial institution with interest. That's the loan. What's happening with a Murabaha contract is the financial institution is owning the home, and they actually have title for a little less than 24 hours, and then they are marking up the price of the home to, in the case of the brother, about $998,000, and they are selling that home back at that price. And then once the sale is made, the brother would pay, in that instance, $998,000 over 25 years with a fixed rate. And it's not unlike somebody saying, a cell phone, right? Saying, here's a cell phone, here is the price of the cell phone, deciding how much profit they're going to include in the cell phone, and then saying, you can buy it back from me, or buy it from me for this amount, and this is how much you'll have to pay me if you wanted to do it over this period of time. That is a standard Murabaha contract. In the article on the website, and I encourage the questioner who asked the question to just take a look at that article. You can see how this model was a classic there was a classical situation where folks in markets, in traditional Islamic markets, would use a Murabaha style transaction to purchase items, maybe if they had an agent, or maybe they wanted to defer payments with a seller, or if there was somebody who needed to come in as a third party to help out. This was something that was used. It wasn't preferred, though, and that's important to note, that like scholars have from the beginning said that this is not a preferable method of transactions, but it is a compliant method, and that sense that this is compliant but not ideal has persisted. It's been one that we've had for hundreds of years within the Islamic tradition, and it persists. And it's true also here, perhaps, that like this is a compliant solution, but perhaps not ideal in meeting certain standards of risk sharing that we would hope to see eventually, inshallah, come into the market. I hope that answers the question.
Yeah, Jazakallah khair, Farooq. That was very well said. And I think, the aspect of the difference between a halal chicken and a haram chicken, right? This chicken, at the end of the day, just what the process they went through for that chicken to become halal is what makes the difference. And I think that's something you have to keep in mind. So we're not saying you're eating pork, or just saying you're eating chicken. One is halal, one is not. Allahu alam. I think, can you increase the payments on service model? I don't think you can. It's very restrictive. Farooq, maybe you can ask us a question.
Yeah, the answer is no. Yeah, you can't. But you can come you cannot. Yeah, but you can come and buy and exit early. And if you do exit early, you have to pay the remaining balance, and then plus the break fee, which is what we were able to reverse engineer in the spreadsheet.
Correct. Not sure if you want to answer this question. The approval amount by service puts the monthly cost almost 50% of the net income. If we add other costs of the homeownership, it will be very difficult to pay. Yeah, that 7.2% is not cheap.
Yeah, that's right. And I think that's kind of, thank you, Hash, again, for that rent to buy comparison. I think it just sort of highlights, as a forcing function, what we can actually afford without being house poor. We need to make sure, we need to make sure that we are buying homes, renting homes that allow us still to live our lives. And it's important to not get caught up in the marketing out there that just kind of like sells you on getting more and more home, but to be mindful of how that's going to affect your cash flow and your ability to live life outside of, like Hash said, you can't eat your home.
Absolutely. I think you touched base on this very quickly. Farooq, maybe if you answer it one more time, the concept of having insurance on your home or having insurance on your car, for that matter, right?
Right. Yeah, I think so. Like I've mentioned, and Hash, I think would reiterate, I'm not a Sharia scholar. I don't do compliance questions, and so the one thing that I would say though is that I do refer to well-known, noteworthy bodies that will touch on these matters, and I would refer the questioner to the Assembly of Muslim Jurists of America, who've pointed out they hold the position that conventional insurance is not permissible, but in the case of somebody who owns a home and needs to, given the circumstances, it's permissible given that particular situation.
Jazakallah khairan. If we follow the 1/3 rule, the loan amount should not be more than $300,000. I think that was in your slide there, Farooq.
Yeah. I think this this question is just saying that, like, if we follow the 1/3 rule, then we have to get less house, and I think that's true.
Yeah, perfect. I think this is something ChatGPT can do for you, my friend. Amar, please compare the conventional mortgage to the service mortgage for the initial example of something for each show. Yeah, you can actually go to an online calculator, mortgage calculator. Just put one interest rate at 4.4, the other one at 7.2. You can see the differences, and it'll give you the amortization charts and tables and costs and everything else for the next 25, 30 years. No problem. Super easy to do this, my friend.
Can I just mention one thing here, Hash, just really quickly? Yeah, I just want to bring up this slide here. The reason why this is the reason why we ended off at 10 years is because often, though we amortize over 25 years with mortgages, often the home that we're actually in is like about 10 years. So I think the question that we have to be asking is, how long are we likely to stay in the home, and then deciding, okay, that's the end, not 25 years, because very few people stay in one home for 25 years. There are some who do, but not many. So make sure that the time horizon is pegged to something realistic, not something that's just a number.
Jazakallah khairan, Bola. We're very, very happy and glad that we were able to help you out and put you at ease a little bit. Like I said in my presentation, renting is looked down upon. Actually, something very interesting happened, Farooq, the other day. I was having a conversation with one of the clients. They're getting pressured to buy a home and all that fun stuff. And I'm like, I don't get it. So you have a $500,000 portfolio. Let's just say it goes up 10% a day. You made 50 grand in a year, right? Profit. Mm-hmm. If you have a home $500,000, it goes up 10%. I think the people who are pressuring to buy want to know how much money you made, because your portfolio is hidden from them, right? So they have no idea how much you made. But if you own a home, they can mathematically figure out how much you made. So therefore, they want you to buy a home. I don't know. Came to this weird conclusion of something. But so I'll say, Bola, here, just be in a position to make sure your money's working for you, right? Make the money work for you. Be open to investing. There's a lot of halal investment options available. We helped launch the Mackenzie Share Global Equity Fund, where you can put your money in, invest it, and grow it, and allow that money to work for you in a very disciplined renter. So disciplined renter wins over ownership, but you have to be disciplined. And inshallah ta'ala, Allah knows best. Mm-hmm. Can prepayments be made, and what's the maximum? Can make prepayments on the halal mortgage. There's no maximum. Either you can pay the whole thing off, or you can't. That's what I understood from Sheikh Hassan Shibani, right?
That's right. So if you're somebody who wants to do that, you'd have to have a separate account where you're putting that extra money away until you have the amount to pay off the entire.
Yeah, you can pay the whole thing off or nothing. You can't do prepayments. You can't double payments. You can pay 10%, 20%, like you can do with traditional mortgages. It's fixed. Right. And pay the whole thing off or not. Also, BIMPay, if you want to, asadwal.ca/media, there's actually a good podcast with Sheikh Hassan Shibani where he kind of breaks down some of the specifics. I think we answered the question, what happened to the unpaid balance of halal mortgage if the borrower dies? I think it's deemed sold and then cashed out. My understanding was that's what Sheikh Hassan Shibani said, I think.
Yeah, Sheikh Hassan had mentioned that it's a case-by-case situation. Depends also who's on title. So case by case.
Can I transfer my halal mortgages to service? The answer is no, cannot do that. Folks, I'm sorry. If I lose my income are there Sharia-compliant options to pause or reduce payments? The bank says no. They kind of override the Sharia aspect of it, I'm assuming, at this point.
Right. Yeah, and the other thing to note is that because the amount that you are signing up for is the total amount of the home over 25 years, that amount cannot increase. So they will not increase the amount. So if a payment is missed, my understanding is that they'll give you a month, but they are permitted to begin foreclosure procedures a month after non-payment. There's a process there, and there could be more time given, but that's the rule that we've been told.
Absolutely. One more question came in. Unfortunately, yes, my friend Abdul Ghafar, we only work with Canadians. MashaAllah, there's a lot of inquiries that come to us from all across the world, especially our friends in America. But unfortunately, we're restricted to Canada at this point. One day, inshallah, we can help and serve you in US, but right now we are only Canada, and that's why I had the Canadian flag on the Deen plus Dunya. And Jazakallah khairan for that. Okay, folks, listen, Jazakallah khairan. I hope this was helpful. I hope this was beneficial to you and your families. I hope you learned a few things I didn't know before. And my huge Jazakallah khairan to you, Farooq, for joining us, expanding on this. By the way, the article you've written is absolutely phenomenal. What we've did is we kind of scratched the surface of it. For those of you who are interested in doing a bit more deep dive, please go to muslimmoney.co, read the article. I read it a couple times. I actually even listened to it a couple times. I had it playing in my ear just so I know what I'm talking about. You've done phenomenal work on there. Zakat calculator. You have a zakat calculator. You have a lot of cool tools on there. There's the Islamic will kit available as well. So between Brother Farooq, muslimmoney.co, Assad Wealth Management, we are a force, and I want to thank you for your time and educating the Ummah. Inshallah, this benefits you in this world and hereafter, inshallah.
Ameen. Jazakallah khairan.
Okay, folks, take care. We'll talk to you very soon. Assalamu alaikum wa rahmatullahi wa barakatuh. Until the next time we meet.
Wa alaikum assalam.